Welcome back. Of course, the big theme over the past week and more has been weakness in software companies. That has contributed to market volatility. Our guest has some ideas for your portfolio that he thinks will cut through the noise. We are joined by Shiraz Ahmed, CEO of Sartorial Wealth. Great to see you.
Thank you. Great to be back.
And of course, you're a quant, mathematically focused player in the market.
Absolutely. As a portfolio manager, we tend to focus more on momentum as our primary factor that we follow, but also risk-adjusted return and a few other variables as well.
Could you give me your broad thoughts on this pessimism in the software stocks? Maybe if we put up a 5-year chart for Adobe, just as an example. I mean, that seems to have a lot of downward momentum right now.
So it does right now. And again, I think some of it may end up being overblown as time progresses, because I think right now we're seeing that the application of AI is really now being called in. And so before it used to be just a lot of question and answers, things of that nature, fairly simple use cases. But now that we're seeing that it has some ability to do more complex needs, there's always the risk and concern that perhaps SaaS or software in general may be at risk. So I think right now we're not sure which the obvious winners and losers will be over time, but I think it's something that everybody needs to be watching. I think right now there's a little bit of I guess, overblown market sentiment.
One term we're hearing more of is vibe coding, and apparently that's where you use AI to build software, but you just use natural language.
Yes, it's actually remarkable on what it can do. You don't need to know anything about coding. So even if you think back just a few years ago, a lot of the rhetoric was to especially younger folks learn coding. Well, now all of a sudden everybody's vibe coding. So it is definitely disruptive. I don't think there's a question about that, but I don't see there, at least in the short term, that these software companies are completely going to vanish.
Yeah, the Wall Street Journal in the Herd on the Street column says the belief that major corporations will replace highly complex software platforms with vibe-coded apps is a stretch. Because this is stuff like payroll, and I mean, it's mission critical.
It's extremely complex. So I don't think that this is going to be an easy replacement. Now, perhaps over time, there may be some risk, but in the short term, I don't think that there is. So right now, this is just a most recent excuse for people to look at the stretch valuations in AI and perhaps take a bit of profit taking, frankly, happening overall.
You have some ideas for us. Let's get to your first one, Next Era Energy. Tell us what attracts you to this stock. NEE is the symbol.
So if we're still on the theme that AI is going to be a big play going forward, well, this is again back to something we talked about earlier in my last visit, the picks and shovels on AI. So Next Era being a very, very large, arguably one of the largest electrical utilities in the world by market cap. So we're playing the fact that they have the power generation, the data centers need power. They've signed multi-deals with all sorts of hyperscalers. So I think this is something that we like overall as a way to play AI without necessarily being in the hyperscalers themselves.
What about Quanta Services, PWR? Remind us what they do.
So Qantas is, again, an infrastructure play, again, on the energy side. So another picks and shovels opportunity for folks to participate in. They're one of the ones, if you are still thinking that the AI theme still has legs in it, well, then this is a way where there needs to be electrification of the United States. There has to be continued updating and modernization of the grid as well, and they're one of the best ways to do that.
And that stock, wow, look at that, up more than 50% in the past year. Like so many stocks, it bottomed in April. Maybe we could put up a 5-year chart. I'm not sure if your analysis really gets into this, but do you track the risk of euphoria in some sectors?
So generally, yes, we're always aware of it. But again, momentum is all about the trend is your friend. So at the moment, the trend is still our friend. And we're in there. What we'll often do is miss the first beginning part of a rally, and then we might miss the last little bit, but we'll get the meat in the middle. And that's always the goal behind it.
The meat in the middle. Okay. PWR. Okay, we've dealt with that one. Morgan Stanley is your next idea.
Yeah, so this is, again, a much more stable name relative to the other two. Morgan Stanley being, again, a diversified financial services company. They have done a phenomenal job with a lot of their M&A activity and investment banking over the last year. Asset management services and wealth management, again, have been also big revenue drivers. You know, this is over a $9 trillion asset manager, and they're phenomenal. And again, it's been a very stable company for quite some time, so it's one that we like.
I wonder, will we see the Wall Street Journal suggests that we might see private equity swooping in on some of these software companies. It says the valuation has gone down from about 39 times forward earnings to about 21 times now.
So there may be the opportunity for some of these PE activity to actually start stepping in. I think that is where some of the risk is coming in, why some folks are getting onto the sidelines, just a bit of a wait and see pattern. I do think that there will be likely some opportunities in software.
And what about at your own shop, your mathematicians? Are you using AI to code?
Absolutely. So we're using AI as part of the background of what we do, including the help deployed of AI agents across the world to be able to help us filter down the investable universe that exists out there. So absolutely, we are using it.
Yeah, I find AI can be very useful for finding information. You don't want to trust it. But, in fact, you'd be reckless to trust it implicitly, but it directs you to reliable sources, I find.
It does a phenomenal job doing some of those repeatable tasks and be able to filtering down the universe for us, for example. But again, you can't blindly just look at the data that's coming out there. A lot of it sometimes can be factually inaccurate.
Yes.
So it does need human eyes and trained human eyes. So you can't just use it on its own.
Thanks very much indeed.
My pleasure.
Okay, that was Shiraz Ahmed, CEO of Sartorial Wealth.